What's going on, guys? Rick FX here. Welcome back to my YouTube channel. I'm back again on your screen with another educative topic, right? Guys, we are almost at 3,000 subscribers. Kindly support by clicking on the subscribe button. Also share this channel with your friends so that we can hit our next target, which is the 5,000 subscribers, right? In today's video, I'm going to talk about a concept that really changed my trading game. As a matter of fact, I was really in like a roller coaster when it comes to my trading. I'll make profits today, make losses today. I wasn't really organized until I started taking this concept very seriously and then implementing it. So I'm going to show you guys a little trick today that can take your trading to the next level, right? And it's called what? Risk to reward. So most of you out there have heard of risk to reward and even know what it is. For some of you, you don't really know what it is. In today's video, I'm going to take my time, explain what risk to reward is, why it is important to maximize it, and then how you can go ahead and maximize it or incorporate it in your trading system, right? So without wasting much time, let's get right straight into the video. So what is a risk to reward? Basically, a risk to reward is a mathematical calculation used by investors to measure the expected gains of a given investment against the risk of loss, right? So you understand that as forex traders, we are speculators in this business and then nothing is guaranteed. As a matter of fact, when you understand that trading is a matter of probabilities, you then understand the real importance of risk to reward and then why it shouldn't be underrated, right? So this is like the theoretical explanation of risk to reward. But if you look on my charts for most of the time, before I take a setup, let's say a buy setup or a sell setup, I'll have this box right here clearly indicating my entry price, my stop loss, that is what I'm willing to risk on this trade, and then my take profit levels, right? So this is the example for a buy, and then this is the example for a sell. So you realize that at all times I want to make sure that the blue area is bigger than the red area based on my strategy, right? So if you put a cursor on this box, you can look at this column right here. You can see clearly written risk to reward ratio, and this is 3.08. So what this basically means that if you risk 1% of your account, you stand to win 3% if the trade goes into your favor, that is if it hits your final take profit. So when it comes to risk to reward, it is set based on our trading system or your strategy, where your strategy tells you to put your stop loss or take profit. But what I want you to understand and why it is important is that, right? So let's give it that trading is a game of probabilities. Let's say you take 10 trades, right? With a good risk to reward ratio, you can have a bad win rate and still be profitable. For a good risk to reward, you want to be targeting a minimum of 1:2. When you risk 1% of your account, you should be looking to make at least 2% of it, and that is how cumulatively after a series of trades you become profitable. So but for the purpose of this example, I'm going to stick to the risk to reward of 1:3. Let's maintain 1:3 throughout all of our 10 trades, right? So let's say you have $1,000 account, for instance. You have $1,000 account, and then you are comfortable with risking just 1% of this account per trade. So 1% of this account makes it what? $100. So that is you risking $100 per trade. Now if you stick by, or if you stick with the rule or the risk to reward per trade being 1:3, it means that for every trade setup, if you lose, you're going to be losing just $100, but when you win, you're going to be winning, you're going to be making how much? $300, right? You're going to be making $300. So let's say after a total of 10 trades, we won 5 and then lost 5. So when we win, we make $300. When we lose $100. So if we win 5 trades, it means that 5 is multiplied by what? 300, and it gives us what? $1,500, right? So in a situation where we win 5 and then we lose 5, we make a total of $1,500 profit, and then with our losing trades, which is equally 5, because we lose $100 anytime we lose, we end up losing a total of what? $500, right? $500. Now if we subtract this $500 from our total profit of $1,500, you realize that we'll be left with a balance or total profit of what? $1,000, which is 100% on our investment. And then we just clearly achieved 100% on our investment, just maximizing risk to reward and not even over leveraging, right? Mind you, our risk is still the same. We were just targeting a good risk to reward. Now for a risk to reward to work properly, mind you guys that we are working with a ratio 1:3. So you want to allow the trade to actually hit your take profit. So this brings me back to my concept of always accepting your risk. So when you take the trade, you are either going to make your 3% or lose that 1%. At this point, you can eliminate the thoughts of taking partial profit on the road, because when you are doing that, it tends to alter the data that you have for your trades. So you want to allow the trades to either hit your take profit or hit your stop loss, right? So now let's take another example where we have lost more than we actually won. In this case, we won just 4 trades and then lost 6 of that, right? In the situation where we win just 4 trades, it will be what? 4 multiplied by 300, and in this case we get $1,200. So we are making $1,200, right? After 10 trades, and then we lost 6 this time around, so that will be $600. So just like that, when you take the $600 from our $1,200, how much do we have left? We have a total profit of what? $600. This is a situation where we lost more than we won. So this is why risk to reward is important, and you can even go further and even prove yourself right. But let's say we won just 3 trades and lost 7 of those, right? So 3 trades making $300 per trade gives us a total of what? $900. And then in this case we lost 7 trades, so that will be a total of what? $700. So even with the 30% win rate following a straight risk to reward, you realize that you come out still profitable, in this case with a total profit of what? $200. So, and then trust me, if you have a good strategy or a good system, your win rate will also be a very good one. I mean, with risk to reward, you don't really need a good win rate, but with a system that has also a good win rate, you can already tell how far you can go when you follow or when you add risk to reward in your system or in your strategy religiously, right? So there you have it, guys. That is a practical example of how risk to reward can turn around your trading game for you if you understand it very well and apply it to your trading system, right? So when it comes to maximizing risk to reward, as I said earlier, in this case, you just want to allow the trade to hit your take profit or your stop loss, and then you are good to go. So that brings me to the end of today's video. If you enjoyed this video, kindly click on the subscribe button. Also turn on your post notifications so that when I drop my next content, you'll be one of the first people to watch this video, right? Also click on the link in the description to join the Rick FS trading community on Telegram, where I drop free trade signals from time to time, and also other trading materials or trading educational content, right? You want to click on the link in my description to register with my recommended broker, XNES. You want to click on the link in my description to follow me on all social media platforms at RICK__FX. Is at Rick__FX. You can shoot me a DM, right? I'll see you guys in the next video. Peace out.